Hi, it's Peter, sales team of Fordata. Welcome to the first in 2024 episode of Fordata Cafe. Today we delve into the summary of 2023 in East Central and Eastern Europe. Join us as we explore the 2023 rewind, outcomes, top transactions in the region, popular investment directions, and some trends that shape the CEE business landscape. Right after that, we will see what trends will shape and will be the key drivers in M&A in our region. 2023 was a time of modest sentiment. It had two phases. The first half was characterized by stagnation and declines in deals volume comparing year to year. In the second half, however, we observed increasing deal activity as a result of macroeconomic stabilization caused by adjustment of sellers to buyers and valuation expectation. In third and fourth quarters, we saw inflation declining in some of economies in CEE, and that was the real incentive for the buy side. With that, investor trust has risen. According to the latest CMS Emerging Europe M&A 2023-24 report, created in cooperation with EMIS, the CEE plus Ukraine witnessed 1,187 transactions for a total value of 32.48 billion of euros. Looking on some countries, the highest number was noted in Poland, 284 transactions. Second was Romania, 199. The third in rank, Czechia, 139. Also, we had Ukraine with 89 transactions. The fifth was Croatia with 83 and Bulgaria 82 deals. The main investor by a country was the USA, and the most dynamic presence in value was observed from the United Arab Emirates direction. This was caused by the acquisition of PPF Telecom Group by Etisalat for 2.5 billion of euros. The transaction was seen in Hungary, Slovakia, Bulgaria and Serbia. Speaking of the big deals, the record one took place in Slovakia, where the local US steel has been acquired by Japanese Nippon Steel Corp for 2.75 billion of euros. Also, another record deal was noticed, the acquisition of Profi Romfood by Ahold Delhaize for 1.3 billion of euros. This was the largest grocery deal involving private equity not only in Romania and CEE, but in Europe. Looking at trends, let's point out those worth mentioning. Renewable energy, ESG scrutiny, AI machine learning were the main directions in the whole continent. Of course, these factors will be key drivers and the value enhancers for the M&A players in 2024. The investments into innovations was a target not only for private but also governmental initiatives. The major one, 3SIS initiative, had their summit in Bucharest. The group has introduced a new member, Greece, and raised its second fund for innovation. It is an uplifting sight seeing further consolidation into the dynamic center of Europe, where the average economy growth since 2003 is 3.5%, twice bigger than the EU's average. Innovation Fund is aimed to enhance energetic safety, building digital and cyber connections, and consolidating infrastructure, making CEE a stable, prospective market for investors. Except slight decrease in the number and the value of transactions, the CEE has another time proven its track record, resilience, and a growing potential. From the risks that we observe, the first is geopolitical tensions, especially ongoing conflicts in Ukraine and Israel, or far Red Sea shipping crisis and US-China rivalry. A must-observe area is definitely one of the main CEE's partners, Germany. In the end of January, we observed further recession, collapse of manufacturing sector, and these sectors with high energy consumption, chemical or metal processing. This might be a chance for CEE where the costs are much lower, yet we should observe this impact in the whole European landscape. Similarly to 2023, in 2024, we will observe lowered inflation in CEE states. Likewise, the CEE consolidation as a part of the globalization and nearshoring strategy, further AI innovations, which will drag the big investments in our region, and climate tech development, so all the solutions that will reduce costs of creation, storage, utilization, and logistics of the energy. Thanks for watching. We hope that you enjoyed the video. Stay tuned for more exciting content soon.